All right, welcome to the James and John economy. It has been a busy week for everybody, the economy included. So we're going to take a look at a bunch of stuff and go from there. So first, start off oil prices. They've been staying pretty steady. They're down from a few weeks ago, but they're still hovering around their typical mark, around $70 a barrel. Give or take. Natural gas had a little high. It's going to come down again. Let's look at some charts. This is the mighty, mighty dollar. Now, it has gone up in value in the last little bit. Could this be due to Doge? Could this be due to a few things? We're going to look and take a deeper glance at that. But know this, that the dollar had this huge swing up. It's starting to swing down, and it may start to swing back up again. We don't know. We're just going to follow it. But if it gets up to around here or so, that when it gets up to 112 to 115 or so, that's when the world starts to fall apart, or so I've been told. More on that later. All right, here's oil. It is hovering in this little channel. It's got this little stair step down type thing. It might go up and down. What's going to really be a big issue is if it breaks this, right? When we see it kind of come to this hidden instance, we're going to see some stuff. This last little cycle might have pushed it out a little bit. Who knows type thing. We're just going to keep it. I'll just keep it there for now. But the important portion is, as time goes through, we're going to see it. Remember, in one of my last hypotheses, I thought sometime this summer, the summer of 2025, is when oil was going to spike up, kill the economy, everything go down. We're going to see if that's going to happen. Not sure, but I do know this, that it did not break down like it had the chance to, which is good, right? It broke up, then kind of hovered back down. A lot of it's geopolitical right now. There's a lot of things just in a standstill. I know a lot of oil companies are drilling right now. Some of it's the weakness of the economy is some fears that send it down a few dollars, which we're going to get into that a lot here in this video. So stay tuned. This is not going to be one you're going to want to miss. We're talking about real estate at the end, and it is going to blow your mind. At least I hope so. At least I hope you're prepared. Anyhow, but that is where oil's at. Nat gas, it's got these ups, downs, higher ups, downs, higher. So could this be, oh, sorry, excuse me, this is gold. Oops. Oopsie. All right, we'll just continue gold and we'll go natural gas after this. But gold is having a huge pullback right now. Could it be a delayed pullback that we had from BTC, Bitcoin, which we're going to go over next? Which you haven't heard about that, buckle up, kids. It could have a pullback, slight pullback down to this little orange, this little yellow line, which is the 50, and then pop back up. But we will see things are, or it's going to pull back, kind of hover, and keep pulling back and pulling down. So we shall see. Here is U.S. natural gas. Same thing, just like oil, really. It kind of came up, having a little pullback back. It broke over $4 when it was cold. It's under it right now. It might hover around it, but when it starts to heat up, we start to use our AC, which is going to push it up quite a bit more. All right, on to Bitcoin. If you haven't seen this, this is a very sad drop. Look at that. I mean, that's kind of like a perfect, almost perfect head and shoulders or double top, right? Just up, kind of down, droopy up, and then just fall straight down. Now, it has recovered quite a bit since then, which was a bit shocking, right? I know I talked to one friend and I told them, I encourage them. This is not financial advice. None of it is on this channel. We're just paper trading and looking at stuff. But I told them to sell right around here, right? And I'm guessing they didn't. And they kept on. And I said, hey, did you hear about Bitcoin? It had fallen. At that time, it was only around 84-ish, right? And actually got down. Someone bought it at 78,000. Whoever that is, I would. They just made 20 grand-ish, 15-ish period of a few days. But like they said, back the truck up. Now, we might say, oh, they were right, James. Look, it's coming up. I'm willing to bet that before it hits here, it's going to hit down here, right? Not what a lot of people like to hear, but we shall see. Time will tell. Could be a double top. You could have the head and shoulders in here. I mean, it just, when something goes straight up like this, a lot of times it gives it back, right? A lot of people are expecting it to fall down to, I think, 74-ish was the number I heard, maybe 74-ish, 73, something like that. It could pop all the way down into the 60s. Again, it broke the 200 for a sec, And then people started to buy. It's kind of weird. And they had the candle close right there at 82. Whew, that is close. But if people jumped in short it late, they are going to pay for it. It's going to hurt. But it's something to keep your eye on, right? Now, why did Bitcoin break like this, right? There are quite a few thoughts on it, quite a few sayings. Some of it, people are thinking, hey, a lot of the money that Doge is finding out is fraudulent and stolen from the American people, right? Just printed into the existence of not the anything forwarded by the taxpayers, but into someone else's pocket via fraudulent activity, right? Maybe a lot of that was going into crypto, and the drain is getting pulled with that, and so people are pulling out, they're selling, they're just not pushing more into it, which will make it decelerate, right? That's one of them. So there could be the government cuts. It did fall from 25% from all-time highs. That's a rough fall too. Quantum computing could be another one, right? I don't know if you heard about this, but Microsoft just made their first quantum chip. What is quantum computing? Well, basically think about it like this. You and I and computers nowadays think about when we're solving a problem, right? Let's say we're trying to get into a maze. We look at one path at a time. Okay, that path didn't work. We're going to do another. We're going to do another. We're going to go to the second path at a time. It didn't work. All right, we're going to do another one. A quantum computer does all of those at the same time. So if there's three directions, right? If you go and there's that whole like tale of three doors, which you're going to choose, right? Door the one on the left, the one on the right, or the center. We typically choose one at a time and go down that path to try and solve our problems, right? The quantum computer says they do three all at the same time. They open every door and go down the path at the same time to try and find the answer, right? So they are, if humans are problem solving down here, right? Quantum computers are problem solving up here because they're doing it all at the same time. And the more complex the task, the faster they will beat us at it, right? So my point is, how does that tie into Bitcoin? Remember, the security of Bitcoin is about all of our computers giving key codes and such and communicating with each other at the same time, right? Or at least in a trend, either forwards or backwards. Quantum computers can solve all of that at the same time. In other words, it can crack Bitcoin. It can hack a quantum computer taught in the right way will be able to hack Bitcoin. Let me say that again. A quantum computer will be able to hack Bitcoin. That could be some scary stuff, and that would make the value of it fall because it's kind of like someone else can print money, and they can hack Bitcoin, steal it from your wallet without you even opening your wallet. Things like that, kind of crazy stuff. That could be it. That could be it that caused the downfall. Also, it could be it could be this. February 25th, Starbucks announced a layoff of 1,100 corporate employees of restructuring plan. Walmart, I didn't find it here, but the earnings were weak, right? This is why a lot of the stock market's down this today. Along with Starbucks, the government, 70,000 people took the buyout program now, and they're looking at trying to eliminate 1 million more federal employees, right? You have Joann Fabrics stores to close all stores. I mean, you just have all, who did buy them? GA Group. They're still going to start so. Yeah, you have a lot of these companies that are firing or letting people go, right? And Warren Buffett has more cash and sells more stocks, right? He even Berkshire Hathaway. So Warren Buffett is at his highest amount of cash reserves that he's ever had. I think it's like $312 billion or something like that in cash reserves. I mean, it is just an amazing, huge amount. He's even stopped buying back Berkshire Hathaway stock. Check this out. Berkshire's strong 2024 performance was not enough for Buffett to buy back shares of his own company stock, and he halted buybacks in Q3 last year, which for the first time the company didn't purchase its own stock. What does that mean? It means, hey, my stock is going to be worth less in the future. I believe it will. That's why I'm not buying it now, because I can get it at a better price in the future. All of this could be the start of the dollar rising up, right? yeah, DXY. The dollar gaining a little bit of momentum, right? Starting to come back up, and BTC and other assets starting to fall, right? I mean, we got oil, we got gas. Um, uh, so high dollar puts pressure on everything else, right? Long story short, well, um, let's get into the real estate portion. Well, long story short, is a recession here. U.S. delinquency rate surges to its highest level in 14 years, right? In other words, people aren't paying their bills, they're not paying their mortgage, they're not paying their auto loans. Kobe Kessler, on X post on May 18th, auto loans serious delinquency rate surged 2.8% in the first quarter of 2024. 2 point in the first quarter. Let's just say it's 2.5 and put it for the whole year. That's 10%. That's a lot for surging up. It's bad type thing. These are going to be, this is going to be worse. 14 years. What happened 14 years ago? That was like 2011. That was coming out of the last recession, right? To take a break real quick. Well, let's just keep going through the recession stuff. How about that? Um, here I was actually I run an insurance agency, so if you're in Texas and you need home and auto quote, give us a call. It'd be Phoenix Insurance, 346-307-9500. Again, 346-307-9500. Shameless plug right there. You just have to have property in Texas, by the way. But I was looking at a Zillow listing. This is not it, but I just looked at their charts, and look at Zillow's charts. I mean, you can just see in Zillow's charts things are up, peak, down, comes up, and it's just kind of headed downward. It might go up a little bit, but it just seems like it's going to be heading in this trend downward. This is in Austin, by the way, so you could have one shoulder, one head, and another shoulder, kind of a sloppy shoulder. That's a head and shoulders pattern. It means it's going to go down. It'll probably come back at least, well, we typically measure here to the neckline, right? This is what we do that. Now, if that's true, it's going to be probably right about here is where it's going to come back down. So this property that was once valued, about $850,000, could fall to about 550, back down to 550, which is around what it was in to 2018 to to early 2020, right? That is crazy. Now, what else are we looking at? Let's see here. Let's go this one. Oops. Okay, this is the one that I wanted to get. Atlanta Fed's GDP Now model on Friday lowered its forecast of the U.S. economy to a contraction of 1.5% annual rate. This would be the first quarterly contraction in the economy since the first quarter of 2022. The weaker growth comes as talk of a possible recession in the U.S. economy has picked up. So here's the thing. We did have some pullbacks in 2022. Could this be a pullback? Yes. But here's the big issue. In 2022, we had a federal government that was spending money delinquently, or excuse me, that was fraudulently printing money and throwing it into the system. This current administration is not doing that anymore. In the last 2 years, the number one job creator has been the federal government, right? We can see that in our debt numbers. Bam, in our debt numbers. 36 trillion. I forget if it was like what 1 trillion in the pandemic or something. Oh my gosh. Let's do a time machine right here. Ooh, yeah. What was in 2020? Uh, hmm. Dude, it was, I guess, 25 trillion. Which part of 2020? Let's do 2016. Is this? Oh man, we were at 19 trillion in 2016. Man, that doesn't feel good at all. But from 2016, almost in 10 years. Oops. In almost 10 years, that's 2029. So that's what they're speculating. We've more than doubled it, right? Or about doubled it. Our debt, gosh, in the trillions. This sucks. And that's interesting. The Doge clock had to do. The Department of Government Efficiency Advisory Commission, the real-time savings objective from reducing government waste, fraud, and abuse in the federal government agencies. So that's what they're trying to take off, or how much they're taking off, which is interesting. I like the Doge clock. But my point is this: is that the last administration has been spending like drunken sailors. So if we just use this guy, go back to 2020. It was 25 trillion. Good God, they've spent. $11 trillion in 4 years. Holy hell. It's a lot. Um, and that's not coming into the economy anymore. And the government's not growing more jobs. They're not adding more people to the payroll. They're taking it off, right? So all this is a reduction in spending, which means it's going to be drained and things are going to be down, down, down. So the dollar will probably strengthen because people need dollars, and it's going to be um, and it's going to get really, really rough here. Um, Everyone's talking about uh, the recession. As you hear, job claims are just fired to the highest. Have just fired the clearest recession warning. Loss of federal jobs would be a negative shock, but the U.S. economy needs to suffer several shocks and will experience a recession. Doubt that. Now, could we just be a pullback? True, but it has begs the big question: what's going to propel us forward? What's going to keep things going up? If there is no liquidity coming in, what's going to do that? Warren Buffett sees it. We're going to go into a recession. This is going to be rough. My postulation is by the end of this year, and I've said this before, they're gonna actually label it a recession. And sometime, if I did the charts right, I can look at those later. But if the charts are right, sometime in 2026. In the middle of 2026 to 2027 is going to be our 2008 or 2009. It's going to be the best time to buy real estate. Interest rates are going to drop. And so if you're holding real estate right now, I hope you sold it. I hope you didn't buy in the last 4 years or you're going to be upside down. That's what it looks like. And so best of luck to you. I'm going to wrap this up by showing you something that I found in Zillow the other day. This is really cool. If you go to zillow.com/research, right? Here we go. They've got a lot of cool tools, right? So let's see here. So the better way to do it is Zillow.com premier-agent/real estate research tools. I'll try to put this link in the bio. But 5 real estate research tools that'll make you a market expert. Blah, blah, blah. Heat index. This is kind of a cool one. Let's open this up. Market one pager talks about it. Housing market snapshots, month over month, year over year, affordability dashboard. I mean, these are kind of like really cool. And again, it's from Zillow. However much you trust Zillow or not, they're getting statistics from somewhere, so take it with a grain of salt. But this is really kind of a cool one, this heat map, right? Talks about a neutral market, seller's market, strong seller's market. It gives buyer's markets, seller's markets they've seen from these heat maps. I mean, seller's market, yeah, New York, look, like New York and New York is still good. San Fran and San Jose, that's very interesting. A seller's market. Albuquerque, Provo, Salt Lake City. I haven't heard of any of these as being really seller's market, but unless it's like DC, that's a Richmond, Virginia, which a lot of politicians are selling their stuff in right now. Parts of California, LA. And I will tell you this right now, if it starts in California, it'll pretty much wear its way west. So if you're in a great state like mine, right here, Texas, right now you might be like, oh, we're in a neutral market. Yeah, neutral. It's going to be that way for now, but it's not going to be that way forever. All of this stuff will start to come in, and it can do it in as little as 2 to 4 months, right? Gives you some strong ones, but also one of the things I want to look at this is how to interpret this data to increase the index from one period to another indicates competition for the homes is higher than it was previously. So in other words, if it gets stronger, competition is higher. It makes sense, right? This is in the U.S. generally, so it's 2018, 2019. It's kind of just ebbing and flowing a little bit. Maybe have a little more competition, cool, type thing. Then 2020, it hits up to a seller's market, strong seller's market, really strong seller's market. Okay, Fed starts to raise rates. It gets a little weaker. It still sells a little weaker. Okay, neutral. This comes seller's market again, stronger, neutral. Sellers, neutral but lower. So if you look at these, they're starting to go lower. This one may come up to here and then come down lower, right? I don't think it's going to drop straight down, but it could start to go off. We will see. Time will tell. But from where we're looking at, things are going to get rough. So if you have real estate now, I would try to liquidate it, especially if it's a flip. I would be very cautious if you were you, or say, hey, in the back of your mind, can you hold this as a flip? If you got rentals and you bought them, 2011, 2015, something like that, you got a lot of it paid off. Hey, you want to keep them cool. If you bought them recently, you might want to choose one or two to sell. So if you sold the ones with the most equity, I would probably sell those first to keep cash, cash. The ones with the least equity, you're going to use that cash to hold on to them longer, Again, not financial advice, this is just what I would do. But anyhow, I want to leave you guys with that. We are looking at a very, very tumultuous time here in the next few years. I hope you have a lot of liquidity. I hope you have a lot of good irons in the fire, like I do. Businesses to grow, ones that can grow in the middle of a recession, and from there on, best of luck with you. I know I'm going to go on a buying spree when this happens, and when I start buying, I think you definitely should too. Not financial advice, but I think you definitely should too. With that, give me your comments, give me your questions, give me if you like this or not, and I will see you on the next one.